Hi guys, welcome back. Today you'll be hearing a little bit more about Sheng Siong and why it may be a good company. Some people have been saying the share price of Sheng Siong is going up because people are hoarding toilet paper, people are buying Maggi noodles. But again, when they buy so much in advance, in future they're just going to buy less, correct? So that doesn't really impact the share price of a company. But Sheng Siong has really done quite well over the last couple of weeks. It has outperformed the Singapore index itself by about 15%. So today we'll deep dive a bit about Sheng Siong, what is its figures, and if this interests you, stay tuned for it. The first thing I noticed about Sheng Siong is its high gross profit margin. I always assume that, supermarkets operate on a razor thin margin. Companies such as Carrefour, they have closed down. Companies such as Giant, they have been, restructuring quite a little bit. I always thought supermarkets are a cutthroat business, very difficult to make money. But Sheng Siong actually does a 26.8% profit margin. How does this work? That means for $1 that they sell to a customer to you, what they actually do in terms of purchasing price is 73.2 cents, and they can sell that thing to you at $1 and you've been buying it. So this profit margin is really healthy. It really shows to you that they are able to mark it up sufficiently. Their marketing is good, they are competitive, and that really shows that the business is well run. They're able to keep their costs low and they're able to sell it, market to you well. So that's a very good indication of a good company. With such a healthy profit margin, it seems that the more stores they open, the more money they make, the more profitability they drive, and that has been exactly what they are doing. If you see over here, they've been increasing their number of stores in Singapore. The focus is mainly in Singapore in retail. Of course, they've been trying to break into China, but that's just a very small segment which is still negligible as of current moment. The next part to notice about it is impressive amount of cash in his bank account. Is about 82 million in net cash right now that's sitting for it to continuously expand and keep building market share. Because right now, if you see over here, they're the number 3 player. They could use this to continuously grow their business, and that is good news if you are an investor of the company. I've done videos on dividend investing in Singapore, and if you're keen, I'll actually leave links over here for you to find out a bit better. But Sheng Siong as a dividend stock may work because right now they're delivering about 2.5 to 3% in dividend yield, and as you can see over here, they have growing earnings per share, which means they can continuously distribute a little bit more in terms of dividend each year, and that is good news when it comes to investing with dividend approach. I have 2 key further thoughts to share with you. The first thing is Sheng Siong is actually trying to partner with Razer to bid for DigiBank. If they are successful, that could lead to more customer base and more revenue moving forward. The other thing is Amazon and Alibaba are keen to break into the Singapore market at some point of time. If that comes, we don't know if they'll partner Sheng Siong, or we don't know if they'll be disruptors to Sheng Siong's business. So that is up in the air. It depends on how you view the competition landscape and how you're going to track the competition landscape. Hema Sheng Siong is something that I went to when I visited Hangzhou, and it's pretty cool because they have a very well integrated delivery system as well as freshness system. And that is something that, if they are trying to bring to Singapore, they could decide to partner or they could decide to compete against Sheng Siong. So that is up to you as an investor to decide what is the future challenge that Sheng Siong is going to face. So let me know your thoughts. Do you think Sheng Siong is a good company to invest in? Warren Buffett mentioned it's much better to invest in a company, a good company at a fair price, than a lousy company at a great price. So Sheng Siong most definitely looks like a good company. The only deciding factor is whether you should invest in it. So let me know your thoughts. Leave anything that you want to share in the community. And again, if you haven't subscribed, I invite you to click on the subscribe button because we'll be sharing content like this every week. And join our community, become more financially savvy. With that, I'll sign off. I'll see you in a future video. Take care and goodbye.